This meeting is being recorded.
Good evening, good afternoon, good morning, whenever you are. This is another part of Become cTrader Master series. And today we are going to talk about the Forex currency markets, and we are going to review some pairs. We are going to review the conditions. We are going to talk a lot about the situation related to the currency trading on the cTrader, so you can become more proficient and more educated about this trading platform. I'm just trying to find out where is my button that allowed me to there you go, to switch to the full screen, and I have finally found it. So of course, what you have to do here is to turn on all of these features that cTrader has, which is the trade watch. As you can see, the trade watch was started at the bottom of this window, and now of course we have the active symbol panel. So let's review the currency markets, and let's talk about the currency markets you can trade using the cTrader on TopFX. So of course you got all of this list here under the trade menu. So the list is the popular markets, indices, US shares, Europe shares, iShares ETFs, Forex, metals, Asia Pacific shares, energies, and cryptocurrencies. Those are all symbols. You can of course click the watch list for the popular markets, and this expandable menu will roll to the downside here. Nevertheless, let's just leave it here and go to the all symbols of Forex market. As you can see, straight on we got some sort of the markets available for trading. So what do we have here is the euro dollar. Now the euro dollar, I'm using right now the euro dollar chart on a daily time frame. This is the most traded Forex currency pair, right? So in the situation of the Forex trading, most likely this pair has a turnover that is a vast majority of the turnover it comes from this pair. Nevertheless, you need to know that this is not the only pair that is traded by the market professionals separately. Why? Because the pairs I'm going to talk about are called like majors, right? So what are the majors? The majors are the most traded pairs. Of course, it's easy to spot it. Euro dollar. So we got already currency called euro, currency called dollar, pound to dollar. So that's the third currency, which is British pound. And then you have US dollar to Japanese yen. That's the fourth currency, which is the Japanese yen. And the last one is US dollar to the Canadian dollar. So that's the fifth currency, Canadian dollar. Those are majors. And those majors are responsible for better half or even more of the turnover, or the daily turnover on the Forex market alone. I'm talking about the currency market, not the indices, not the shares, despite the fact that they are of course here on the range of the markets that you can trade in TopFX. I'm just talking about the currency markets right now. So we got the majors, euro dollar, dollar to pound, and of course the US dollar to Japanese yen and US dollar to the Canadian dollar. Those markets are correlated. That's another thing, but we're going to talk about it later on. So we got this 5 pairs basically, the majors. We got the minors. The minors are euro to the Japanese yen, Australian dollar to the US dollar, US dollar to the Swiss franc, euro to the British pound, of course, very, very important cross, and New Zealand dollar to the American dollar. Okay, so those are the minors, and the rest of these pairs, as you can see here, are called exotics. Exotic pairs, there's, well, when I'm swiping down, you can see there's plenty of the exotic pairs here, and very often traders concentrate only on trading these major pairs or minors. Why? Most likely the first choice of every beginner trader will be euro dollar and cable, basically British pound to American dollar. Because why? Because it moves up and down. So the scalpers or day traders have plenty of opportunities to use this market to their favor. So they can, of course, go long or go short. That's not a problem. But what they can do is they, of course, use some kind of a correlation. So let's just talk about the situation. Before we are going to talk about the exotics, let's just talk about the correlation. So we got the euro dollar. Euro dollar is very highly correlated with the British pound to American dollar. Basically, if euro dollar is going down, British pound to American dollar is going down either. So likelihood of this positive correlation is very high. It's above 0.5, around the level of 0.6, 0.7, 0.8. Basically 0.7, 0.8 is this kind of correlation. So very big correlation between these two majors. Now, if euro dollar is going down, then most likely another major, US dollar to Japanese yen, is going up. As you can see, we got this up move here on US dollar to Japanese yen, and we got this down move here, right? Why this is happening? It's very, very simple. When you trade euro dollar, and if you are, for example, let's say you are short euro dollar, that means you are selling one currency and buying another in the same time. You can do it, of course, by clicking here and just enter the sell, open the sell order. For example, one lot of the sell order. As you can see, I'm perfectly fine with this order. I can even trade, I guess 10 lots would not be that bad. 100 lots, no, but I think that maybe even 30 lots would be nothing wrong if I would like to trade it. There you go. But behind this very simple procedure, behind your sell order, basically what you do is selling euro and buying US dollar. So if everyone is, or majority of the market participants are bears, they have as they call it, they are the supply. They are selling euro, buying dollar. So if they are buying dollar, what's going on with this currency? This currency is going up, euro to the Japanese yen. Why? Because people are in the same time buying US dollar and selling Japanese yen, which is why this is going up. So this is negative correlation, right? And it's a very, very nice correlation between it's a minus 0.7 minus 0.8. So it's the same as the positive correlation between euro and dollar. Okay, now the other currency here, currency pair, US dollar to the Canadian dollar, is not that strongly correlated to any of any particular pair, but this is something that traders called the currency, which is commodity currency. Why? And what commodity this pair is correlated to? Well, basically both US dollar and Canadian dollar economies are based in some matter to the oil. Basically, the US dollar is correlated with the WTI, or as they call it, crude oil. Sometimes it's even dollar is being called petrodollar because of this fact. And of course, the Canadian dollar is strongly correlated with the oil because the one of the most important commodity for the Canadian economy is, of course, the oil. So if we take a look at the US dollar to the Canadian dollar, we might like to find very interesting negative correlation between the rate of the US dollar and to the Canadian dollar and, of course, the oil, right? So please pay attention when the oil is going up. Maybe this rate will be much more likely. It's not certain, it's correlation. Remember about this. There are other factors that influence the price of the certain currency pair. The US dollar to the Canadian dollar might be likely to go in opposite direction, which is why they are negatively correlated. Okay. So those are the basics correlations. Now let's go back to the euro dollar. So in other hand, euro dollar, is it correlated to anything else? Well, it's correlated to the pound. It's there's inverted correlation to US dollar to the Japanese yen. What else? How about stock indices? How about US stock indices? Which one would be the most correlated to the euro dollar? Of course, the biggest one, the broad market index, which is called S&P 500. And this is again inverted correlation. So euro dollar, for example, is going as it is here to the upside. So what is S&P 500 do it? Okay, let's take a look. What is the S&P 500 do it? Let's go to the US 500. That's the index. As you can see, in a broader perspective, let me just take a look here. There you go. US 500 has been moving lower. Okay, so the correlation between these two, the euro dollar and the S&P 500, is it's called risk on, risk off. So when there is a risk on the stock indices, well, the risk on is when the stock market is rising, is moving up, which means that the euro dollar will be moving up as well, right? Why? Because the investors are buying stocks for what? In USA, they are buying the stocks for US dollar, of course. And if they are basically, if the risk is on, the most riskier currency in the pair of the euro to the dollar is euro. Why? Because the US dollar is one of the biggest safe haven, of course. So if there is a chat on the market somewhere in the media, in the social media, and here and there about the situation when the risk is on, which means that the market participants are much more focused right now on buying shares. Because why? Because the investments into the shares can bring plenty of the premium for the risk, so they can bring much more profits than the traditional investments, which means they are selling they are giving away the US dollar, buying the stocks. In the same situation, there's a reaction on the US euro to the dollar pair. They are buying euro and getting rid of the US dollar. So that's the situation. Of course, this situation can be applied to any other indices. However, it's not that obvious like it is between euro dollar and, of course, the S&P 500. So that's another correlation here between euro dollar and the S&P 500. There is third one, and it's it might be a little bit clearer. Of course, the same situation, the positive correlation is between the euro dollar and gold. If people are buying gold, that means the euro dollar is going down. Why? Because gold is safe haven. If people are buying gold, the most likely it's either the two situations: the gold is in the uptrend, or the market participants are flying into the safe haven, which means they are buying gold, dumping in the same time the US dollar. So if the euro is a risk-on currency, much more riskier than the US dollar, in this situation, market participants will be selling euro and buying US dollar because they will be flying into the safe haven. And from those two currencies, euro and dollar, US dollar is the safe haven, of course. So that's another correlation in the forex markets, in any financial markets. It's not just about the forex market. So we got the majors, we got the major correlations with the other internal market, financial market correlation with the other commodities, with the precious metals, with the indices. So what is the British pound to American dollar correlated to? Well, it's not that easy to find a good steady correlation that will increase the odds to happen when there is a certain trend on the market. So most likely British pound to US dollar is correlated with the euro to the dollar. Okay, this is the strongest correlation. The other one is most likely the correlation between British pound and Japanese yen, and the British pound to Australian dollar. However, the last one is not that much, is the weakest one. It's still some kind of a correlation, but it's weakest one. Okay. So miners, as you can see, very often react on the movement of the on the majors. However, they can live their own lives. They have their own market. They have their own trend. So it's not necessary that smart to rely only on the correlations between the markets. Nevertheless, please notice the fact that if euro dollar is going, euro to the Japanese yen is going up, pound to Japanese yen is going up as well, and the USD to Japanese yen, as you can see in that situation, we're going up as well. Australian dollar to Japanese yen can be going up as well. At least there's the situation when this pair is going up is much more often than represented on the market than not. Okay, so please take a look. Canadian dollar, Japanese yen, Australian dollar, Japanese yen. Can you see the slide? There you go. And that's another move to the downside, as present on the previous markets. Japanese, British pound to Japanese yen. There you go. This is the slide. And another euro to the Japanese yen. Here you are. There is still the slide. You see? So it looks like if you got the minus, those minus is very often seen on the minus market, like euro to the Japanese yen, for example, British pound to Japanese yen, Australian dollar to the Japanese yen, Swiss franc to the Japanese yen. I missed this one. Look at this slide to the downside, and of course Canadian dollar to the Japanese yen, and New Zealand dollar to the Japanese yen. Where is this one? There you go. New Zealand dollar to the Japanese yen. Here you are. That's the slide. Okay, those are very often correlated to one of the currency and between themselves. Sometimes this correlation is not that big. Nevertheless, if one of the currencies is moving, the whole bunch of miners is moving in the same direction as well. Okay, so that's the general basic rule regarding the miners. So what else? We have here plenty of so-called exotics. So what is the characteristic of the exotic? What's so special about that? Well, you see, the exotics like US dollar to the Norwegian krone, for example. That's one of most of the exotic market. US dollar to the Mexican peso. Very exotic market. Euro to the Swedish krona, for example. US dollar to the Polish zloty, exotic as well. And there's as you can see, there's plenty of markets, including the ZAR, SDG, again Mexican peso to the Canadian dollar, of course. And you got the NOK to JPI, which is Norwegian krone to the Japanese yen. You got the Swedish krona to the Japanese yen. Even here you can see the slide to the downside. What's so characteristic that this exotics is that if there is a trend, either up or downtrend, it takes a much more effort to reverse the trend on the exotic market. Okay, that's the first thing. Second thing, if there is a strong trend, either up or down, it's very hard to terminate it, okay? And the third thing is that this market, these exotic markets, very often are characterized by much bigger movements during the trend and much bigger volatility if there is a directional move, okay? So that's the three very important thing that you need to take into the account while trading these markets. Of course, the spreads on these markets will be bigger than the spread on the most important and most traded forex pairs like euro dollar. That's obviously the thing on the forex market. Nevertheless, it is really good to make yourself familiar with some of these markets, because they are very often underused and undervalued. And as you can see, when there's a trend, especially if you are a long-term trader, when there is a trend, if you catch it, you can see there are really solid profit to be right, to catch basically, and good trends to ride from the beginning almost to the end. Very often you got the situation with the US dollar to the Polish zloty. You can see that within last, let's say, 6 months, it went from 3.80 to 5 straight on. That's a huge appreciation of the American dollar and huge weakness for the Polish zloty. For example, of course, there's plenty of these markets. There's hundreds of these markets. You can see how many of them it is here. I don't even have enough time to basically speak about any of them. The point is that there are markets that are called majors, minors, exotics, and of course they are correlated, intercorrelated between each other. They are correlated to the other markets like oil, gold, indices, for example, precious metals and stuff like this. And the last thing is that they are all characterized with different things like spread, like average true range, like the ease of move, like the lasting of the trend, uptrend or downtrend, volatility of the for example, daily volatility or monthly volatility as well, and of course the susceptibility for external, let's say, comments or maybe events or some kinds of a news. Regardless of the fact how we would like to see the forex currency pairs, we need to know that this is still the central bank network. So any intervention of the central bank will be visible on this chart straight on. It doesn't matter if you trade the euro dollar or if you trade, for example, let's say random currency. This is of course Swiss franc to the ZAR. I think it's the currency from the Africa, I guess. This is that market. So my point is that it will be visible on the market, so you can't basically run through it. Very often one of the most susceptible market for intervention of the central bank is what? This fella, US dollar to the Japanese yen. Very often Bank of Japan intervenes verbally or physically on this market much more often than on the other currency pairs like euro dollar or the British pound to American dollar, or even Australian dollar to American dollar. And of course, what happens then is like a spike, right? The spike to the upside, spike to the downside on the chart. So and then it hits the wires, so everyone know about it, that the possibility of the central bank intervention was very high. So we need to remember that we are trading the the network for the central banks, and those entities, they have their own business to carry on, their own plans to maintain and to follow. So it's not that it doesn't just because the forex market is so available to everyone these days doesn't mean it is isolated from the external events. So there are some markets that are very susceptible for this kind of news, for this kind of events, for the forex economic releases, central market interventions, as interest rates decisions, or the CPI decisions and data and stuff like this. So that only means that every time you try to build like a portfolio for your trading, and forex trading, of course, I'm talking about the currency, you need to take this into the account, that you are not trading in the separate let's say separate system. You are part of a bigger financial system, and this financial system is intercorrelated inside, and the movement on one of the markets will likely have the reflection on the other market as well. So this is what I wanted to talk about with you on today's webinar. Just a general look, general point of view for all of you, especially beginners traders who might feel a little bit insecure while looking at this chart and wondering probably why there is so many forex pairs here, and why everyone is talking about this and euro and US dollar to Japanese yen, and maybe Aussie, which is a commodity currency as well, connected with Australian dollar is connected very, very strongly to Chinese economy, because mostly of the commodities they are being exported, and so on and so on. So as you can see, educate yourself about the forex market, because it's a very, very big market, interconnected to each other and with the other markets, and you need to have the some sort of the recognition of what is what, which market is more susceptible to the news, which market can move bigger in certain direction, which market can move longer for the certain direction. And there are other markets here worth to give a try, worth to do the research, worth to do the analysis, especially in the little bit longer term than day trading, for example, that might bring that might bring some profits and might become some valuable assets in your trading portfolio. So that's my webinar, that's my message to you during the currency markets review on the cTrader by TopFX. Thank you very much for watching this webinar, and I hope I see you guys next time. So take care and bye bye.